Welcome to the Deep Dive. We're here to cut through the static and get to what really matters.
That's right.
Today we're digging into the Q2 2025 earnings call from Faraday Future Intelligent Electric Inc., FFIE.
Always an interesting one, Faraday Future.
Definitely. They often present this fascinating mix, right? Little bits of progress happening alongside, well, a lot of market doubt.
Yeah, persistent skepticism is probably fair to say.
So our mission today, let's break down their latest financials, look at their strategic moves, and try to figure out what's really driving that caution from investors, even when they announce things that sound like big wins.
It's a really intriguing case. This quarter's call, it had a lot going on. You saw some, subtle improvements operationally, but also some really bold, almost audacious new strategies.
Audacious is a good word for it.
It's a tricky balance they're trying to strike, and I think the market's reaction tells us a lot about what investors really care about right now.
Okay, let's peel back those layers then, starting with the headline numbers. Q2 2025, the bottom line, still red.
Unsurprising, yeah.
Reported a net loss from operations of $48.1 million. Now, that is a slight improvement compared to the $50.6 million loss same time last year.
Right, a couple of million better.
And if you look at the adjusted operating loss, that was about $27.4 million. Works out to, what, an average monthly operating loss around $9 million?
Yeah, around $9 million a month. So they're trimming some costs, it seems. A smaller loss is, well, it's still a loss, but it does hint at maybe some better cost control.
But the cash flow story is where it gets interesting, right?
It really is, because if you look at the first half of 2025, their operating cash outflow actually went up to $43.6 million.
Which sounds bad, but maybe expected.
Well, yeah, it's not entirely surprising. You got to remember, they're trying to ramp up production for the new FX platform. That costs serious money up front.
Okay.
But here's the counterpoint. They managed to bring in $55.1 million in financing cash inflow during that same half.
So more cash came in from financing than went out through operations.
Exactly. And this is the fifth quarter in a row that's happened. Financing inflows beating operating outflows. For a company basically still in the pre-revenue phase, well, it's critical.
Keeps the lights on.
It does. And this ability to keep raising capital pushed their cash position at the end of the quarter to an 18-month high, although they didn't actually say how much cash that was.
Okay. So, still finding ways to fund the dream, basically.
That seems to be the case.
So, okay, we've got a slightly smaller operating loss, impressive financing coming in. Sounds okay on paper, but like you said, the market reaction was cautious.
Definitely cautious.
Shares dipped after the call. So what gives? Why this sort of show me the money or maybe show me the cars attitude from the market, despite these financial points?
Yeah, that's the core tension, isn't it? I think the market's saying, okay, financing is great, you need it to survive, but it's not enough by itself.
Right.
They see that higher operating cash outflow and think, okay, scaling up is expensive. And the show me part is all about turning potential into reality, meaning converting those pre-orders into actual sales. Turning those production targets into cars actually rolling off the line. It's about execution, not just raising more cash or making promises.
Right. Execution. And speaking of that, let's talk about what everyone's watching. The FX Super One vehicle.
The big new hope.
They said they got over 4,000 non-binding paid pre-orders in Q2.
Okay.
But then by July 31st, that number jumped to over 10,000 units.
Yeah, that's a pretty significant number.
But how significant really? Is 10,000 pre-orders a solid indicator, or is it more hope? Especially with that non-binding caveat.
Well, it's definitely a crucial demand signal. You can't ignore it. It says people are interested enough to put some money down, even if they can get it back.
Okay.
For Faraday Future, it sort of validates their product idea and gives them a number they can show investors. But yeah, that non-binding part is absolutely key.
The real test is getting firm orders and delivering.
That's the chasm they need to cross. And on the production side, they say the FX Super One is now officially in parts procurement and production prep at the Hanford factory in California. Trial production is apparently underway.
And the timeline?
Ambitious. They're targeting the first FX Super One off the Hanford line by the end of this year, 2025.
Wow, okay, that's soon.
It is. And remember, this hinges on their plan to invest about $100 million more in U.S. ops, which itself depends on getting more financing.
So it always comes back to funding.
Pretty much. But it's not just the U.S., is it?
No, you're right. They've got Middle East plans too.
Exactly. They also expect the first FX unit to roll off a new production line in the Middle East by year-end as well.
Seriously, both by year-end.
That's the plan. They just signed the lease and got the keys for a facility in the Rasma Economic Zone over there. Site prep is apparently started.
So aiming for 2 production lines starting almost simultaneously, that doubles the complexity, surely.
It absolutely does. But, potentially doubles their reach and output if they can pull it off. Big if.
Okay, if hitting those production targets wasn't ambitious enough,
Uh-oh, here it comes.
Faraday Future also rolled out something that sounds, well, less like an earnings call and more like science fiction.
Yeah.
An EAI and crypto dual-flywheel and dual-bridge eco strategy. Yeah. And launching a C10 Treasury plan. What is an EV company doing messing with crypto?
It definitely threw a wrench into the narrative, didn't it?
Yeah.
The C10 Treasury plan, basically, it seems like Faraday Future is betting on crypto to, I guess, boost its balance sheet, maybe find new revenue.
How?
Their stated goal is to accumulate a portfolio of the world's top 10 crypto assets, become a sort of leading treasury for this basket of coins.
Okay.
Phase 1 targets buying somewhere between $500 million and $1 billion worth.
$500 million to $1 billion.
Yeah. Subject to funding, of course, always
Yeah.
subject to funding. But they plan an initial $30 million purchase to start.
That seems like a massive bet for a company that's still trying to just build cars. And for you listening, think about this. An auto company already in a super capital intensive, risky business, now adding highly volatile crypto assets, it feels like a huge new layer of risk.
It absolutely is. And regulatory scrutiny, too, potentially.
So is this visionary Web3 finance, or maybe a bit desperate, are traditional funding routes getting tighter?
That's the $1 million or maybe $1 billion question, isn't it? You could argue it's forward-thinking, tapping into new ways to manage money.
Mm-hmm.
If it works, maybe it provides a big new capital source. But the other side is, it looks risky. EV making is already tough. Adding crypto's volatility and uncertain rules, it's exponentially more complex.
So innovative, or maybe a sign of trouble finding regular cash?
Could be either, or both. Market observers definitely flagged it as a major risk. Didn't help the post-call sentiment, that's for sure.
Okay, let's shift gears a bit. Governance and market standing. They made a point of highlighting the return of the founder, YT Jia, as co-CEO, said it helped boost market confidence, pointed to a nearly 300% jump in market cap.
Which is a big jump, admittedly.
And they announced they're now officially in the Russell 3000 index. They frame that as boosting visibility with institutional investors.
Which it generally does. Being in an index like that forces passive funds to buy your stock.
And it seems like it might be working. They mentioned Vanguard upped its FFIE holdings by over 500% compared to late 2024, and BlackRock increased its stake nearly 7-fold just from the previous quarter.
Wow, those are significant increases from major players.
Sounds like strong votes of confidence, doesn't it?
It absolutely does. Getting into the Russell 3000 is a visibility boost, no doubt. And seeing Vanguard and BlackRock increase stakes adds legitimacy. It shows the big, sophisticated investors are looking seriously, maybe seeing long-term value.
Anything else on the governance front?
Yeah, internally, they launched these 10b5-1 executive stock purchase plans. These are basically preset plans for insiders to buy stock.
To avoid insider trading accusations.
Exactly. It's meant to align executives' interests with shareholders. They're also planning a special meeting to rename the company, get this, to Faraday Future AI Electric Vehicle, Inc.
Adding AI to the name. Very 2025.
And they want to increase the shares available in their equity plan, signaling future focus, more stock compensation likely.
Okay, so on one hand, founder returns, market cap up, index inclusion, big institutions buying more, execs buying stock. Sounds positive.
Right. Looks good on the surface.
But then, the elephant in the room, the delayed Q2 10Q filing.
Not good.
And they disclosed SEC Wells notices were issued to senior leadership. Can you quickly break those down? What's a 10Q delay mean? And crucially, what's a Wells notice signify? Why is this adding to the caution?
Okay, yeah, these are critical. A 10Q is the mandatory quarterly financial report for the SEC. Delaying it, that's a red flag. Raises questions about internal controls, maybe accounting problems, transparency issues. Investors and regulators hate seeing that.
And the Wells notices.
Even more serious. A Wells notice is basically the SEC staff telling someone here, senior leaders, we're planning to recommend enforcement action against you.
Like a warning shot.
Exactly. It's like a pre-indictment. Gives them a chance to argue why charges shouldn't be filed, but it means immense legal risk, reputation damage, serious governance concerns.
So even with big funds buying in, these issues are hovering.
Absolutely. It suggests that while they might be moving forward operationally, there are still significant internal and regulatory storms brewing. Clouds the whole picture.
Puts a very different perspective on things.
Yeah.
Okay, what about tech and efficiency? Anything interesting there?
Yeah, they talked about continuing tech updates, released a new software version 2.00.58, the FF91 via over-the-air update.
OTA updates. Pretty standard now, but important.
Right, improving stability, user experience, treats the car like an evolving platform. They also plan to roll out a voice interaction system using large language models, generative AI, across the FX Super One and other models later this year.
Keeping up with the AI trend.
Seems like it. More broadly, they stressed building up their internal R&D, especially in software and AI, and importantly, transferring tech developed for the expensive FF91 over to the FX line.
To save costs.
Exactly. Manage cost and complexity, don't reinvent the wheel. They also mentioned implementing their PPTIA framework, stands for Process, Platform, Technology, Integration, Application.
Hi, Kichi.
Yeah. But they claim it's helping cut costs and improve efficiency. It's their internal methodology for streamlining things.
Okay, so let's bring this all together. For you, the experienced investor looking at Faraday Future after this call, what's the big picture?
Well, it really highlights the struggle for these pre-scale EV companies, doesn't it? It's just such a capital-hungry business.
Yeah. Those financing inflows are keeping them alive, but that operating cash outflow shows just how much it costs to even try to ramp up something like the FX platform.
It's like trying to get a giant ship moving, like you said. Burns tons of fuel just leaving the dock.
And those 10,000 plus pre-orders for the FX, crucial sign of interest, yes.
Definitely. Shows people want the product, potentially.
But the market's focus is laser sharp now, right?
Yeah.
It's on converting those non-binding orders into real sales and hitting those incredibly aggressive year-end production targets, both in the U.S. and the Middle East.
That's the make or break point. Turning demand into actual deliveries, it's a huge hurdle.
And while the founders return, the big funds buying in those offer some glimmers of credibility. Those governance issues, the delayed filing, the SEC Wells notices they just cast a long shadow, injecting serious skepticism.
You got it. It creates the situation where even good news gets viewed through a really cautious lens.
So ultimately, what's the market saying?
I think the market reaction tells us investors want clear financing paths, sure, but mostly they want proof of execution. On-time production.
Show me the cars.
Exactly. Show me the cars rolling off the line consistently. Forget the bold crypto strategies for now. Forget the pre-orders even. Deliver the vehicles. Execution is everything for them right now.
Okay. Now, before we wrap, let's do our usual speculative thought experiment. Our segment that is absolutely not financial advice.
Definitely not. Purely conceptual.
Given all this, the huge challenges, the wild bets like crypto, the market doubt what could a really unconventional, high-risk, maybe high-reward play look like here? Something totally against the grain.
Okay, purely hypothetically, right. If you wanted an asymmetric bet, something banking on them actually pulling off the near impossible.
Yeah.
You could theoretically build a long position around them, successfully converting those 10,000 plus FX pre-orders and hitting production goals. But you'd want to hedge it creatively.
Okay, I'm intrigued. How would you even structure that conceptually?
Well, you could express the long side by, say, hypothetically buying deep out of the money FFIE call options, maybe 9 months, 12 months out.
White options.
Leverage and defined risk on the premium paid. You're betting on a massive re-rating if they actually hit those year-end production targets in Hanford and the Middle East. The current stock price suggests the market thinks that's highly unlikely.
So it's a mispricing opportunity if they execute.
Potentially, yes. A huge if. It's a moonshot bet on execution, precisely because so few believe they can do it. If they overcome the odds, the payoff could be massive.
Okay, that's the high-risk, high-reward long shot. But how on earth do you hedge something that speculative?
Good question. To hedge that, again conceptually, you might consider a short position in, say, an ETF tracking legacy auto parts suppliers.
Shorting old-school car parts companies. What's the logic?
The logic is, if Faraday Future, or frankly any of the new EV players, actually succeed in scaling up and EV demand really takes off.
Then it hurts the traditional gas engine part suppliers.
Exactly. It inherently comes at the expense of the internal combustion engine supply chain. So a structural decline in those legacy auto parts could provide a partial downside hedge, offset some of the crazy volatility you'd get from just being long FFAI calls.
Interesting. So it's a bet on disruption, hedged by betting against the thing being disrupted.
Kind of, yeah. It's high conviction, definitely high risk, layered rationale. Betting on the whole EV shift, using FAIE as the high beta expression of that bet.
Fascinating idea. Okay, let's recap the core earnings takeaways. Faraday Future's Q2 call, trying to improve finances with cost control, kept raising money, cash at an 18-month high.
Right. And pushing hard on FX Super One production, targeting year-end roll-offs in both the U.S. and the Middle East, backed by those 10,000-plus non-binding pre-orders.
But then there's the big strategic pivot, that EAI plus crypto flywheel and the C10 Treasury plan. Bold, unconventional, viability and risk, totally unproven yet.
Definitely. And while you have some positives like leadership changes, index inclusion, big investors increasing stakes, the delayed 10Q and those SEC Wells notices are significant governance and execution risks hanging over everything. Investors can't just ignore those.
Absolutely. So as always, please remember this discussion was purely for informational purposes. It is definitely not financial advice.
Investing involves risk. Past performance doesn't guarantee future results.
Do your own homework, your own thorough due diligence before making any investment decisions. Always.
Couldn't agree more. Due diligence is key, especially in complex situations like this.
Well, thank you for tuning in to the deep dive. We really appreciate you joining us. Let us know your thoughts on Faraday Future or anything else you'd like us to tackle.
Yeah, we'd love to hear from you.
And be sure to join us for our next deep dive.